We'll do question number 139. It is related to accounting for taxation. The ask is to tell total income tax expense charged to P&L. It has brought forward current taxes of 800, then brought forward deferred taxes of 2.6 million, revaluation of 3.75, deferred tax provision 6.75, and income tax liability of 19.4. So this 19.4, it says that the income tax liability for the year ended 31st March 16 is estimated at 19.4 million. So it is estimated income tax liability of 19.4 million. So that means that it is asking that the provision for income taxes at the end of the period should be 19.4. Okay. So in order to calculate the income tax charge, we will take this 19.4 million as the income tax expense for the current year along with it, but then there is already a provision coming from prior year is 800,000, so we will deduct this one, this 800,000. We can call it over provision or prior year provision or something. I will just call it over provision or provision brought forward, maybe provision brought forward. So we will take it off because the estimated is 19.4. So this is the math, and then there is revaluation of 3 points. So we know this is it is included in the what is that? It is included in the deferred tax liability. If you read the question here, it says that the property was revalued during the year, giving rise to deferred tax of 3.7.5 million. So this in the math it will be a deduction. Revaluation revaluation will be a deduction, and then we have a deferred tax provision of 6.75. So we will take this deferred tax provision, but then there was already something coming from the prior year, so this will go as negative. Um, yes. So all right. So we will do a sum which is 19 million. All of this income tax charge. It's a maths. If you learn it, the maths it should work. Like the estimated income tax liability is 19.4. So we'll add this. Uh, then if there is some provision coming from last year, we will deduct this. So here also you can say we have deducted this, and then this 2.6 million also we have deducted it. Both of these were coming from the prior year. Okay, brought forward deferred taxes. So both of this will be a negative adjustment. So this will be a negative adjustment. This this will be a negative adjustment. This will also be a negative adjustment. Both are coming from the prior year. Then this revaluation is also a negative adjustment. Then deferred tax provision, which is estimated for the current year, should be a plus. Then we have this estimated income tax liability, it should also be a plus. Okay, so even if I delete all of this from here to make it simpler, from here we can see that all right. So this we will deduct, this we will deduct, this we will deduct, and these two we will add. Okay, so this plus this minus this minus this minus this. So it will be simpler for you to remember that brought forward taxes will be a negative adjustment, and the current year estimate of the estimated income tax liability and the deferred tax provision should be a positive adjustment to arrive at 19 million. All right, I mean to arrive at the income tax expenses. All right, so our answer should be 19 million.